All right, let's go ahead and recap October 23rd, Wednesday, 2024, NASDAQ. We're going to go with NASDAQ. We watch NASDAQ, and then we trade micro NQ, most of us in our group. Recap videos are, I think, going to be better. It's for multiple reasons. One, for me, on an operation standpoint, it's hard to get up every day here, prep things up, and then at the same time, I'm working in two groups. We got our own Viper Futures Discord group, and I have a responsibility to the traders there, as well as another place regarding order flow platform. So, again, what the goal is of these recap videos is get you to see the same thing every day, prepare yourself, become independent, not lean in on chat rooms that are trade call rooms, not lean in on systematic trading, which you could use algos, up to you. I'm not going to discuss algos in any of our auction market theory, volume profile, such videos. To the right side of me on the trading view charts, I have a visible range volume profile. When I zoom in and out, it will adjust, and I'll explain what these are. Quite simply, you can find a lot of volume profile videos on the internet that'll explain it better than me. So I just want to be clear that we understand high volume nodes are areas where a lot of volume has transacted, and these little areas here, these little pockets, are called low volume nodes. Let me take away these drawings for a bit here. Hang on a sec here, make sure I did this right. There. All right. So low volume nodes are areas where, again, we have markets go from balance to imbalance to balance. So in other words, we balance, imbalance, balance, imbalance. So these are where you have your big days. Imbalance are initiation days by big money. Okay, so you have initiations back into balance, and you want to find these as support resistance. What becomes better is when we have volumes where we break in and out of, again, as today we had an initiation downwards back into balance of early October. Now, we broke out after being in a consolidation, and it's probably better to show this on the S&P because more liquidity. We were in a consolidation for about 2 weeks on the S&P. I want to show you guys this. This is a little bit easier because a lot more professionals trade this, a lot more derivatives that are traded in here, and order flow and such like that. We had about good 2 weeks in this range of balance. So if you traded in the middles, you'll find yourself having trouble. A lot of people, rookies, newbies, trade in the middles. Okay, and sometimes emotional trading when even all of us get that way. And as you see in the profile, where is most of the profile? The volume traded right in the center. Okay? My mentor used to always say, don't fiddle in the middle, and he was right. It always gives you a hard time. You wait for edges as you discover balance over days, and you trade in and out the edges, and that's one thing, right? But we're looking at this macro time frame, right? So we go out, we initiate a few days bull run, and now we create this new balance. So for the last week here in ES, we've been in this 1, 2, 3, 4, 5, 6 days, and we come down and we test it and try to get back into this balance. What happened when ES hit this 5,800 level, which is what a lot of people were calling in trade rooms, professional trade rooms, may I add, was where buyers stepped in. Let's go back down to NQ because this is kind of where we traded today. And again, I'm looking at the larger contracts on TradingView, but I am trading micros. Prop firms, trading micros, stacking our business plan to grow more accounts, more accounts, more accounts. That way, hey, you know what? You do go on head tilt someday, and you're not going to risk your account unless you're over leveraged. That's the whole goal. So back to today and where we were, okay, is on our composite, we open up and we trade lower. Okay, and we test again, like on Wednesday, October 16th, we go and attempt to take these lows out. What Wednesday did was it tried to get back in this balance, okay, and what it didn't do was it failed and came back in, and we went back in this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 2 weeks trading of balance, 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 which nothing is wrong with that if you know where to find the tops and bottoms by looking at the macro view this way. And then you look at maybe order flow in a smaller time frame, which we're going to get into small time frame chart and different auction mechanic tools. Then you look for buyers and sellers to step in, and then you go from there. Again, value area high, value area low, composite, micro, macro composite, big time frame, profile, low volume nodes, high volume nodes, and you keep track. And I haven't added, and I should have today, that. Another thing, mind you guys that are new or part of our group, make sure you put your point of control. I missed that. I purposely saved it for the video. Your point of control is where the most volume traded in this visible whole range. So since the beginning of the month here in October 1st through here, the most volume has traded literally up here. We traded under it, boom, sayonara. That's implying price is too high, go down under. And then also each individual profile day has a full session. This orange line that you see here, this orange line is the point of control for that individual day. Most of these point of controls tend to get finished and revisited in some other time frame another day, not every other day simultaneously consecutively. But so these are what we call naked point of controls in the auction market theory and volume profile. Okay, or market profile. So now put my drawings back. And I can tell you, I've made a lot of mistakes today too. I try to catch falling knives. When trades went short, under here, you're looking for the next destination to pick up a knife. I called the room, I said at 20,200, looking for a long. I was already up like $100 in micro that day, for the day. Went for a long, it took me out, and it took out a lot of my gain. Then I sat around and tried to wait for another moment. Now, let's break this day down on our smaller time frame 10-minute chart. On our smaller time frame 10-minute chart, I added also an indicator for our users, for our Viper Futures Trader users, open, high, low, close for the month, for the week, and for the day. It's very important because price bounces off of these levels, and if you are only looking at maybe one thing and want to add some confirmation, the best thing you can do is where price revisits in those higher time frame. That's where high time frame traders initiate trades, especially when you get into weeklies and monthlies. Why? Because there's a lot of money that's settled out in those areas. So I have that. Another thing I have, again, is my visible range. And I have my indicator, my drawing tools to sync across globally. So when I draw macro composite high volume and low volume nodes, I am putting them across on all time frames. So when I get into the minuscule of things, as you see today here where we bottomed out at an LVN, that's not an LVN on this small time frame, but I know from a high time frame that that was a place that, you know, if we failed here, which we did, and it toppled me over, that was the next place to get in. And then I put in a double MNQ lot here. I finished my day green, but was very bad performance for me. I'm not here to discuss my performance. I can tell you it was, at least it was green, yeah, whatever. And I've been much more consistent, making constant payouts. That, again, ain't here to boast about that. Why? But I am here to mention, to give the point that that's very important, because consistency comes with a solid trade strategy, a plan, tactical entries and exits, and, you know, size. Because size will come back in to automatically check the hide that's in you, that monster that's in you that, you know, times doesn't want to take a stop. Times is being stubborn. You know, size allows you that room. Okay, anyway, you know, could be against people's models, but that's just what I go with. Initial balance, our first hour of the day comes in, we break up. 9:30 is the closing of that IB. We break under, continuation, retest the bottom IBL. So you have IB high, IB mid, IB low. What is that? It's your 1 hour framework of all the market first hour open. That's your roadmap. Typically, when we test and break on one side or stay above on one side, we are bullish or bearish. When markets get tight like this, you're going to have probably a crappy day. What helps save you and keep you small? Small size. What keeps your P&L gains, small? You will feel like you put in a lot of effort. Guess what? Size. Okay? There's no secrets to that. Now, we have a big day. We break out, come down. Prior month close was not significant at all. It tried. You can see where they tried. And this was probably just sales guys just profiting. But they attempted. They failed. They dumped. A lot of this, by the way, and I will add, and I'm not going to go about it in any of our daily series videos, or recaps, is the derivative option market space had a lot to do with this. People were selling calls and buying puts. Market makers had to sell in a negative gamma state along, which creates the vol, which is why I don't really gauge VIX as anything significant, because VIX is nothing but a derivative of what price is already doing. Price is doing something because the auction is at work. Why am I going to check a barometer gauge of a product, VIX, when it's just a derivative of what's already happening or happened? Okay, now, it's easy for me to look at VIX and say, oh, we're up 20. Well, who cares? Did we predict it on our roadmap? So part of being an auction trader is understanding where to go. Now, I was short in the morning, made some profits on the shorts. I tried to catch a bounce. It didn't work for me. Again, ain't about me. It's for you guys to see this in a zoomed out lens. Okay? In a zoomed out lens. Let's keep this real simple. Markets trade in balance. They get out of balance. They get back in balance. You trade the edges on a macro time frame. Market comes down. Test this low volume node, which usually is a good support resistance, but there's stops fueled under it. Hits the stops, and bam, she rolls on under. Where to? I was thinking the next LVN here. Next room was down here. I took my loss here. Market turn. Took some longs. Left in the green. Nothing to brag about except the fact perhaps maybe some other people blew out. Maybe I'm sitting in a better position than them with my experience. I grade my performance based on what I should do better. Everybody should grade your own self on what you should do. I graded myself as a bad performance even though I left green. It was a small green. Hey. Like you would think with all of this, you would just, do well. There's just days you just not there. We're human organisms, guys. We have emotions in us. We have hearts, and then we have brains, and our brain is literally built to work against us. I don't know why. So, welcome to science. So, here's your high probability trades. You have your shorts here, test, pullback shorts. I took, this place is valid to go take a long, but then take a good stop, boom, long back into the close. That's it. This is what we're doing every day. Micro composite in a smaller time frame. If I come in and I want to see just how the week is, now I come in here. Okay? I just want to see how this fell under in this smaller time frame. Is obvious. We fell, look, out of this range, out of that range, fall under, find support at a low volume node. Okay? So everything coincides. Everything speaks clearly. It could look messy if you think all you want. Now, I also use bookmap. I'm a big fan of bookmap. Liquidity heat maps are something very viable in your trading when it comes down to like getting into the weeds and finally seeing who's really digging into these and who's getting their faith torn off the other direction. Who's taking control is the word I'm looking for. Who's in control now at that moment? Is there a shift in context relative to your level? You guys get this down every day. This is about all you need in trading, and this framework works on any kind of market, even soybeans. Okay, so this is kind of the recap for today, guys. We were leaning in short, obviously from macro time frame. We were coming in the morning, testing out the lows of this range. Over here, broke out. Here's where all the momentum plays were. This alone right here was a 200 almost point move. If you captured anything within all that, that was your play. You had a potential bounce here. I took it. I took a loser. Took another long, rode her up. Okay, still wasn't that pretty for me. But again, this video is not about me. This video is about for you. That's just in a nutshell what you look for every day trading. Now again, not every day is going to be pretty. There's going to be news events coming up once a month like non-farm where things can get tight before a big news event. There could be holiday related coming up, so participants are gone on a Friday. Things of that such. Every day will be different, and it's just because the auction players are either here or not. Why would they not be here? I don't know. Let's go ahead and just highlight this real quick and kind of take a look at this day. See where it even fell in line with everything else. If we look here, it was trading. We were trading. It was probably even this day. Yeah, this is the Friday. My bad. The way that sometimes these guys move, is not calculated correctly. This guy, we were inside day. We had a big move, so we can see we had a big move down, followed by staying inside here, big move up, filled in all that inefficiency, auction. So now, after a few days of being quite loud, we had your inside quiet day. Participants at that time were just quieting down again, in balance, nothing going on. We were in no edge. We were not at a high. We were not at a low of balance. You got to be careful in these damn days. It's going to just clean you up. It's going to clean up your emotions. It's going to clean up your stability. It happens to me because I happen to be here every day, full time. Okay, so I see it, and then I see it in other traders because a lot of people talk to me directly. Okay, so here again, and I talk to people. I have to lean in on some of my guys because I need somebody to lean in onto and talk to. I'm human. I'm no Superman in any fact at all in life, but I got a Superman attitude, but that doesn't mean I'm Superman. But anyway, you see the gist of what I'm talking about here. So high time frame volume profile, daily time frame profiles. How did I make that chart? I just deleted the daily candles and I put a daily profile. So if I deleted the daily candles, what did I do here now? Now I have a daily profile, and I'm running this on full session. I used to run this. You can run this only on regular trading hours. Some auction market theorists, traders, they love to just trade off what the RTH, regular trading hours, showed, excuse me, and nothing to do with the electronic hours. So that's where we are today. So what are we looking maybe for tomorrow? I guess we can kind of wrap it up with that. Market is now trading here back in the middle. This is this price, ETH. If price comes up to these highs again overnight, fails, we want to find price coming. We want to find selling coming back down. If we break over this macro point of control of 20,440.50 area, which will be a big obstacle to do. Maybe some corporate earnings come out, whatever, something stimulates it. We take a break, we're going to test highs again. If we fail, we come back down, test into the lows. If we drop under that, we're looking at going back into beginning of October's range and testing down to those. You have to anticipate the scenarios and wait for the edges and then look at the order flow to see what's going on. I use order flow. You don't have to necessarily. I think that without it, you are sometimes blind. But if you come down into a nice 10-minute chart and have a setups like we do at Viper Futures, then you'll know more or less, based on what the performance of these candles are and where, suggestively, relatively, if you have a good reversal going on. And or continuing with the trend. Continuation, failure, reverse, and that's what you got to just basically repeat with yourself daily. That's it. Again, there's going to be some days for reasons, you'll have reasons. Down day, up day, sideways day into nothing, inside day from, market got exhausted from this. You got to ask yourself, go always back and look left. Market sold off to go up for whatever headline news, whatever they're pricing in. I don't care what they're pricing in. I care about knowing this happened. There's going to be a relief day. It's just a sign of we're asleep now. We're dormant. We're trying to digest more information. We don't know. Okay, that's it. That's in a nutshell. Our trading session was for today, October 23rd. We'll revisit back tomorrow and see how tomorrow did and talk about that until everybody gets up to par on the same processes. This is all you got to do. Again, guys, you can do this on any market. We're reviewing today on NASDAQ, but we're trading micro NASDAQ. And that's about it, guys. Thanks for watching. Let us know if this is helping you out by putting in comments, subscribing, and liking the video. It is very important after a long time off because we're real traders. We can't come here every day. We want to know if we should be coming here every day and presenting this information to help other traders out. That's about it for now. In the future, by the way, not to sales promo this video, I think we're going to have a small subscription fee monthly, but we're going to aim and focus on distributing pretty much almost 100% of that small little subscription fee to be part of our group. And so we're looking to most likely send that money out to foundations such as Traders for a Cause. But again, maybe take a little piece off to cover overhead and credit card fees, commissions, whatever the hell. 80% plus give all to a cause. Because the more we've improved, I've noticed, by collaboration, it gives us a responsibility. It gives us some type of accountability, and it helps us grow anyway. So we're paying it forward, but at the same time too, getting people to put a little skin in the game is beneficial because we just don't want to get bombarded by the circus show that's out there on the internet, because that's what the internet world is, especially in the trading world, is a big circus show of clowns. All right. So, everybody, thanks for watching. Let us know, again, if you liked the video and everything, and if you like to continue seeing this. You guys take on care, and see you the next trading day.